Richard, how's your day in the market been?
It's been okay. Got stopped out of a few names I was long, but managing risk and keeping everything in perspective. So overall, pretty good. And yeah, definitely interesting. We're just kind of range bound, but I'm sure we'll get it into that. And I'm always looking forward to hearing Brian's perspective on everything.
Absolutely. Yep. Today's been decent from a trade perspective. I scalped Tesla, threw out some AMD puts in the morning. Some stuff that did well. Okay. All right. That is out now. The tweet and stock market news is here. So we're going to dive right on into things and get started. If my speakers have the opportunity to either share out the space on your own, or if you just want to retweet the one that I just put out, whatever is easiest for you, would love to get more of your followers in here, especially during power hour on such a critical time in the market. So Brian, I'm going to go over to you first. Would love to hear from you a little bit on sentiment right now, how you're feeling with this, news-based market. We didn't have you last week, so it's basically been about 2 weeks since we've done a space, and a ton has happened in that time. So really wanted to get your full layout on that.
And you got a short memory. I was here last week. It was the week
Oh,
before I
oh, it was the
missed.
week before. Week before. My apologies. I remember it was last week because I remember the content that was in it. But yes, last week we did it, but still plenty has happened since even last week's.
This is true. Yeah. I mean, obviously the war, came to fruition in a big way, and that's was initially the impetus for a rally after that gap lower. And, from there, from that gap lower, it's been pretty, people complain about the choppiness and the lack of direction. We're in a clear downtrend, number one. We're still stuck below a declining 20 and 50-day moving average. We touched on the 20-day moving average today. But, on the important side, when we undercut the January 24th low on coincidentally February 24th, just last week. In other words, we had two lows on the 24th. I don't read into that. It's just an interesting coincidence. But, we immediately rallied off of that. And on Sunday night, I did a webinar, and I was saying that, the key level that we would be watching for potential support if it pulled back was the volume weighted average price from the low last Thursday. In other words, that little flush low. And that's, you just can't make this stuff up. I mean, I know that you're getting more into the VWAP, but and a lot of people are, but the S&P, the Nasdaq, and the Russell 2000 all just nailed it to the frickin' penny, and then ramped higher the last 2-3 days up till today, and then they came up to another clear important area. One, a lot of people, of course, watch the 20-day moving average, and the S&P and the Nasdaq hit that precisely this morning with their high. But it's also the volume weighted average price for the S&P and the Nasdaq. It's the volume weighted average price from the January 24th low. And these are, I've been tweeting these charts out all week, but you just can't make this stuff up. The way it honors these levels so well, and that we're in an environment for shorter term trades, long and short, because when you get a 10% rally in your face, it's, you can't hold short. I can't hold short, and I don't want to hold short. I feel like a fool. So, the levels are there. It's how you manage risk against them. And for me, it's just, the couple day trade typically. And by the end of the day, I'm taking a big piece off, especially on shorts, because you have that tendency for the, you've got a good short going for you. And the next morning, they always seem to gap up and probe for weakness. So I like to lock a lot in, and so I'm doing that. Pretty soon here in one that I got short today, which is GXO. That's been a nice one for me. But if you look at the longer term chart, it just looks like death. So, anyways, I'll let you and Richard go from here as well.
Perfect. Thank you for that introduction there, Brian. Also, for anyone that's in the audience, if you have specific tickers, let's say you're in a trade right now maybe, or you have something that you've been looking at for a while and you want to hear Brian and Richard's opinions on it, you can easily do that by tagging or commenting that ticker on the tweet that is pinned up top. So all you have to do is go in there. I saw Richard drop some beforehand on the other one. Just threw out a new one, just in case anybody wants to drop on that. Either one, I'll be looking at both of them. But basically just put a ticker in there and we will see it and get to it, as many as we can. Richard, what are your thoughts here on sentiment in the current market, and how are you approaching it?
Yeah, sure. So yeah, pretty similar to Brian as per usual. We had that big reversal candle last Thursday. We progressed strongly since then. Let me bring up a chart of the cues just for reference. But yeah, we're kind of in a sideways, choppy environment in over the past few days, and charts are still developing. I like how I'm starting to see higher lows form versus the market, where like Brian said, we undercut that January 24 low. A lot of stocks that I'm kind of watching are starting to, outperform a little bit compared to that and form a higher low instead of a lower low. We're starting to see a little bit more bases basically develop and start to move out the right hand side. Still not quite as many as I'd like, and we don't have many kind of leadership groups out of the oil and gas name, coal names. Shippers have been recently strong. GSLs in today are two examples. But overall, I think what's important to remember for kind of my time frame, which is more swing trader, position trader style, is we're still below a declining 21 EMA on the major indexes. And until we start, pushing through that level, start trending above a rising 21 EMA, that's really when my style kind of shines and we start to see trends that can last more than a few hours or max a few days. And that's really when position trading shines. When you're a position trader in this environment, you want to be aware of that. Trade a lot smaller, trade a lot less, be a lot more selective because the opportunities for longer trends are just few and far between. So that's kind of how I'm viewing things. Also, keeping an eye out for any earnings gappers on super strong volume. We've seen some really strong ones: CARG, LNTH. Recently, super strong action. So those are some of the names that I'm watching, and we'll have to see whether there's opportunities developing there. But there's a little bit more opportunity than in recent weeks, but still developing from my point of view.
Perfect. Thank you, Richard. Appreciate that there. And stock market, is anything you want to throw in here just yet?
Not too much. I'll definitely defer to the two amazing speakers that we have up here on their thoughts on the market and sentiment. Just big shout out to them. Make sure you're checking out Brian and Richard's pages. Click in, check what they're doing, hit that follow button. Both fantastic follows will improve your feed. And, I think that, on these spaces, it's impossible to hide. You can really tell who knows what they're talking about and who doesn't. And, as you're listening, both these guys, you'll clearly see that they do know what they're talking about. And yeah, I'm excited that we have a couple more stocks hitting 52-week highs that I could throw at you that we might get some positive thoughts on. So overall excited for that part, and I won't keep us waiting.
Okay, perfect. All right, let's go over to Richard, to yourself first. You dropped a couple of these tickers, so I'll throw them out there to you to analyze, and then we'll bring it over to Brian. Richard, ARCH and AMR.
Sure. So these are kind of energy related names. I'm not quite sure if I remember correctly whether they're coal or just mining stocks, but these are in strong uptrends. Arch specifically is super strong. Definitely short term extended at this point. I think the best low risk entry was back when it was against its 10 EMA back on looks like 228. That would have been the spot to really enter, and then maybe the next day. But right now, it's definitely short-term extended above the moving averages. But I want to point these out because they're good examples of stocks in long-term uptrends when the market is correcting and just look like they're under accumulation. You can see big volume up bars on 2/1. That's February 1st. Also on 2/15, and then most recently yesterday and today. So I don't think it's buyable here. It's short-term extended. It's hard to manage risk here, but I think these are good examples of stocks and strong uptrends. AMR, let's bring that up. This has also been super strong. It's a little bit of a kind of frozen rope feel the past few days, and it's kind of accelerated yesterday and today. And by frozen rope, I mean it's just kind of drifting higher over the 10 EMA, just kind of going sideways. And sometimes those can kind of give it all back in one bar to the downside. So that's something to be aware of in that type of setup. But it's kind of done the opposite of that. It's accelerated to the upside today. So once again, short-term extended, but in a strong uptrend. This is in a sector industry group that's super strong. So if this does form another base, form a nice low risk entry, that's what I'll kind of be watching for. But right now, for this one, the best low risk entry was back on 2/1. I think this was actually on my focus list back there. I made a video about it. 2/1 that Tuesday, nice breakout above a short-term range through around 65.84, and now it's just kind of drifted higher. and is all the way back at 113, but definitely short-term extended from my mind. Yeah, do you want me to go through the other ones that I put in that tweet?
I'll do two with Brian and then bring them back to you for the
sure
other ones.
Sure
okay,
thing.
Perfect. All right, Brian, can we go through HBP and ARLP?
ARLP and H what? RB, was it?
HBP and ARLP.
I wasn't paying very good attention if I came up with HRB on that. Okay, so HBP, let's take a look. I don't know this one. Who are they? Hooting Building Products. And I see why I'm not familiar with them. I look at the average daily volume over the last 20 days, and one of my guidelines is I don't like to trade stocks. They trade less than 500,000 shares based on the 20-day average. And this stock has an average daily volume of 139,000 shares per day. So, I'll look at it anyway. I mean, it's just been stair-stepping beautifully higher, just higher highs and higher lows. It gets these nice surges on volume. I'm looking at a weekly chart, and, it digests those, makes another surge. The prior resistance holds as support. And if you, look at that weekly chart, you could take a pen and look, or just even look at it, and you'd see a sideways staircase. So it's just a beautiful uptrend. It's holding right now along the rising, I guess that's the 20-week or 100-day moving average. It's from the October move, which came at 5, the stock doubled, and whatever the catalyst was there, most likely an earnings report or something. It's behaved really well. It obviously it more than doubled, and now I think that it's correcting through time, which is impressive. It had to pull back from 11 to 8, but it didn't continue lower highs and lower lows. It didn't fall apart. So now it's digesting this move through gains. It's just gotten back above its 5-day moving average. I think that if you're looking for a new long and you don't mind the light volume, then you could probably get involved in this with a stop below the low that it made this week. And the low that it made this week is important because that low would be, it was 895. So I would put a stop, basically at 893, go 2 pennies below that low. But that volume weighted average price from the gap higher in October is exactly where that low was on Wednesday. So I'm sorry, on Tuesday. The low this week. So, it's digesting through the gains through time. It's had a big run. It's got a healthy longer term pattern. So it's innocent till proven guilty. If you're in it already, I would say that, absolute worst case stop would go below the low on February 24th, where the market kind of washed out because it recovered nicely from there. And if it were to break back below that, I think it would, damage the longer term trend. ARLP, I believe this is it's a limited partnership. So, you have to be aware of these types of plays. I highlighted a bunch of these recently, and they're master limited partnerships. And the problem with master limited partnerships is they give out a K1 report if you hold through a dividend cycle, and the K1s are notoriously late. They always make you file an extension. So what's the current yield on this? Looks like they just went from a 10-cent dividend to a 20-cent dividend at the end of December. The revenues and earnings are growing. We're in a market that's rewarding oil plays because of the where oil is. It's where is it right now? It's oil's up at 109.60. So the risk to oils right now is that if for some reason this war is, something resolves it, oil will lose its bid very quickly, as will all of these stocks. So you have to figure that's an external risk to the energy names, but the trend is your friend. So this morning it had a goofy open. I think that a stop below this morning's low is that was a washout. They were probing for weak people. They stole some stock from people on the open and, ramped it higher from there. It made a low of 1350 today. And, that's why I never set a stop before the open. I always give it at least 5 minutes to make a new low before you get out, because oftentimes they're just, probing for stops and stealing stock from people. So it's in an uptrend. It pays a dividend. Be aware of the K1. Be aware of the risk associated with oil. But, it's a healthy uptrending stock. So I'd say stick with it if you're long.
Really nice deep dive there, Brian. Thank you for kind of going into all the pieces and also explaining your volume scans and more.
Sure.
Love it. Richard, all right, let's do the other three, PanW, GFS, and RMBS.
Sure thing. So, yeah, PanW, I think I brought it up last week. It had a super strong bar on that Thursday 224. And this is another example of what I was kind of talking about, where while the market formed a lower low compared to that 124 low, the low from 124 on PanW was 455.76, and then on that second Thursday it was 466. So it's already kind of showing a little bit of outperformance there. Super strong bar on volume. This is kind of to be you've got the overall macro conditions with more war coming out, contributing to the stock, but overall showing really strong performance. And now it's pushed up, and over the past 4 days is just kind of forming a range, high of 598, low of 567. I'd like to see it go tight a little bit more, let those moving averages catch up to price, but then it could form a little bit of a high handle above the base pivot, which is 572.16. So if it can consolidate above that, not break down, not break below that 567 low, I think that suggests that the kind of short-term holders who are just kind of playing the bounce have kind of been, that supply has been accumulated and might be ready for another move higher, looking for a breakout through that kind of 590 level and the top of that range. Moving on to GFS. This is a semi-name that's been acting well. Recent IPO here, breaking above kind of the 61 level, gap up today, and is acting strong, holding up much stronger relative to the market. Obviously, the market is down 1.5%. If a stock can gap up and have a pretty strong closing range here, that's definitely significant. So definitely an IPO to have on your radar. Also in this kind of similar space, ON Semiconductor is not quite as strong as GFS, but it's forming a tight range right above moving averages. You've got kind of a pivot at 63.57, and overall this is above an uptrending 200-day moving average. And once again, we've got a higher low compared to that kind of 124 area, showing a little bit of outperformance there. So if it can break through that 63.57 level on volume, that could be a good spot to enter for a swing trade or a position trade as it tries to push up the right-hand side of the base. And I just have one more semi. I know I'm doing 3 or 4 instead of 2 here, but RMBS, Rambus Inc. This had a nice push out yesterday through that kind of 27.38 level and is falling through nicely today. So anytime where a stock can really outperform on a day like this, I think it's something to note. And this still hasn't broken out into all-time highs through 29.95. So if it can consolidate, form another spot to get in, form another handle, that could be one to keep an eye on. I think that's definitely, definitely a name to watch. If it can form a tight price consolidation on declining volume, this could be ready for another push upwards and a challenge of those all-time highs.
Awesome, Richard. Thank you for the layout there. Yeah, 2 really interesting industries that a lot of those kind of fall into. Brian, I want to bring it back to you for a couple here. So we have Vale, VALE, and then a lot of people have been mentioning that Crowd has been kind of getting beaten down today after Snow had that drop, but it was having a nice run for a couple of days. So interested to hear your thoughts on Crowd.
Okay. Did you say VALE? Right?
Yes. Mm-hmm.
Okay. Just a nice turnaround here in this name. Again, I will just point out, one of the things for me, and this is just me, is that I don't like to trade stocks like this in that they are ADRs and that their primary trading occurs on a foreign exchange, and then they have to adjust each morning at the New York Stock Exchange with a gap. So it makes it very difficult to manage risk. It's just an additional piece of risk that to me isn't worth it So it's not a stock that I would trade because of that. With that said, though, it made a low in November at 11, and it's since close to doubled. And just since last Thursday's gap lower, it's gone from 16 and a half to 20. So I wouldn't be up. It's in a beautiful uptrend. It has plenty of liquidity, but it gaps every day, so that's a point or two off for me. It's above the rising 20 and 50-day moving average. It's above all the key volume-weighted average price levels, including the year-to-date VWAP, which was tested on January 24th and again on January 31st. So the short term, though, it's just run from 16 and a half to 20. That's 17% in the last week. I think that I certainly wouldn't be looking to be a buyer of it here. It's gone too far too fast to think that it might be able to continue to rally, especially if you look back a little bit to last summer, that this general area in here 19 and a half to 20 and a half basically was a previous level of support, and now we're into that level. So I ask myself, where has it come from? Up 17% in 5 days. Where does it have the potential to go before it's likely to encounter a source of supply that might become resistance? And we're looking at that prior support from last summer that says it's probably short-term extended into an area that's going to tempt people to take profits. So I wouldn't chase it here. If you're long, you know where your stop is. For me, I think the worst case would be below yesterday's low. But again, the risk is that it's a foreign company, and it could gap lower based on what happens overseas where its primary trading takes place. Over to Crowd, it's in a primary downtrend. It's still got a declining 50-day moving average. If the 50-day moving average is declining, it's not a stock that I trust. I think that these rallies are generally a gift to get out of if you had been involved. It's had this huge run off of last week's low. It's getting very close to testing the volume weighted average price from last week's low, which is right at about 188. That'll be a key test for it, I think. I wouldn't short it because it's made a higher high, and this is a prior level of resistance. So to me, Crowd is probably just an avoid. It's more neutral than anything. It's going to have to digest that big rally from 150 to 200. Again, it's a 35% move in the course of a week. It's going to need at least a time correction, if not continued pullback in here. So I would not buy it. I would be looking for where's my exit if I caught this rally. And if you're a longer term holder who's stuck in it, I don't know how to think that way.
Yeah, it's a tough mindset to kind of bank around. Appreciate the insight there.
Yep.
Okay, Richard, with everything going on, it would be, I think, appropriate to take a look at LMT, Lockheed Martin. And in addition, with LMT, how about Amazon?
Yep, just writing those down so I don't forget them like usual. So LMT, always like to take a step back and look at a weekly chart or a monthly chart here. And this has kind of been basing really since February of 2020. And then it pushed down, obviously, with the March correction, and then kind of formed another kind of key pivot right near the 400 level. It's interesting how that kind of works out here. And we just formed another longer term base recently, starting kind of June of last year until really late February. So I like how it was forming a longer term basing structure and then set up nicely in a little bit of a handle there. So going over to a daily chart, you had a pivot right at pretty much that 400 level, just below it. That high from, let's take a look at that date, was that February 11th high was 398.85. So that's where I've got the pivot. On Thursday, 224, I think last week, we had a gap up, a push down, filling the gap, and then a strong close. And that kind of set up the next day on volume where it pushed out, broke through that pivot, and went on a nice kind of 3-day run before consolidating the past 2 days. So this is a strong breakout above all the moving averages. May need some short-term consolidation here, but definitely strong action on volume breaking through a pretty significant level that it's kind of been held under for the past almost 2 years now. So definitely strong action here. Amazon, let's bring that up. I think that definitely looks a lot weaker. We're below a declining 50-day, 21 EMA. We've got a gap up and now a bearish outside day breaking yesterday's low. And looks like we're going to close right near the lows as well. So yeah, I don't like this action at all. I think it was sold today. It's in a downtrend. It's below the 200-day moving average. And this has pretty much gone sideways for, almost 2 years now, and just kind of looks kind of like a stage 3 in the longer term sense, where we're now kind of just below a pretty much flat or almost declining 200-day moving average. And on a weekly chart, if I bring that up, we're still just kind of going flat with the moving averages and just below that, leaking below it a little bit. So yeah, not really interested in Amazon really on any time frame here, unless you're shorting below yesterday's low. But that's pretty much my take on Amazon. Nothing much to like there from the long side.
If I could chime in there too, sorry, Richard, I do the same thing, by the way. I started writing down the symbols because I am always saying, what was that one, Gav? But on Amazon also, I'll point out that it's below the volume weighted average price from the COVID low, and that's not a good sign at all. That that low and that VWAP has been acting as resistance here the last 3 weeks. I think it looks like it's probably in the beginning of stage 4, Richard, and like you said, below the 200-day moving average, and that 200-day moving average is declining. Yeah. This is a stock that I definitely wouldn't want to own.
Exactly.
Yeah, I'm agreeing with you.
Got it. Thank you both. Yeah, definitely. Especially when you're both agreeing on these. Always something I'll probably either stay away from or look for potential scalps to the downside. Real quick to everybody that's in the audience, again, if we're about 30 minutes in, if anybody didn't know, we do this every single week, Power Hour on Thursdays with Brian and Richard. Fantastic follows on Twitter. Both of them spend a lot of time doing their homework over the weekend, trade all week, and come here and give us a lot of insight and opportunities as well. Something to take back and do your own research upon. And if you're enjoying these, myself and Stock Market News, we do co-host these together. We do about 19, 20 spaces a week sometimes. We love bringing content for 8 to 10 hours a day and just continuing to ramp up. So we have a lot more coming over the next couple of months. We also have a big tournament and some other things that we are working on, and we would love to have you all be a part of that. So if you're enjoying it, feel free to throw Stock Market News a follow, throw the Wolf account a follow, and we'll keep pumping out the content for you guys. We do this all day. All right, Brian, I'm bringing it back to you for a look at the indices, SPY and the Qs.
I kind of covered the SPY at the beginning, so why don't I take a look at the Qs? By the way, if I can just point out, as you know, Gov, one of my kind of pet peeves is, people always asking about stocks that are in downtrends and what to buy, and it's human nature. I get it. It used to be a higher price and they want to buy it. Last week, actually, I had mentioned 5 stocks on the long side. They just, and I'm not patting myself on the back here, but I'm just trying to point out that, there are still opportunities on the long side in stocks that are in uptrends. I mentioned CEIX. It was $28. It's $35 today. That's a 25% move in a week with zero drawdown. Same with FCX. It's gone from 42 to 49. Grin is, these are the 5 stocks I mentioned. Grin was 24. It's 25.5 today. HSIC was 83 and it's at 87. And then the other one was LPI, which is basically, I think it was about 76.5 at 77. But LPI is still another energy name that really looks coiled up and ready to go. So anyways, my only point there is that, if you focus on stocks in uptrends and buy them not when they're extended, not after a 10, 15, 20% move, successful speculation is about anticipating where the momentum takes place and getting in just ahead of it or just as that momentum starts to build, you don't wait for volume. Volume confirms price movement, and volume peaks, at the end of a rally. So it'll feel lonely at times, but if you anticipate and participate correctly, then you don't have to take big risks, even in this bearish environment that we're in right now. So speaking of bearish environment, the Nasdaq is today came up to the declining 20-day moving average, as was noted, and that's also pretty much precisely the volume weighted average price from the January 24th low. So when we see two things come together like that in the same place, it gives us a little bit more confidence that it is likely to become resistance. And I think we've spoken about this before, is that, one group of sellers might be saying, or, people who are long might be saying, hey, if it gets up to the VWAP from the January 24th, I'm going to lighten my positions. Sideline cash who's looking to get short might be trading against that VWAP and saying, hey, if it gets up to that VWAP, I'm going to sell short. And at the same time, the same psychology might occur with the 20-day moving average, probably more so with the 20-day moving average because it's so widely followed that some people who, maybe bought last week and they targeted the 20-day moving average as their place to take profits. They take profits. Other people say, hey, it's at the 20-day moving average. I'm going to see how it handles here. I'm not going to buy. So, more supply, less demand equals what? A turning place in the market oftentimes. So it's clearly a level of interest. And then we look at it and say, if we have two groups of participants coming together with the same conclusion in the same area, it's more likely that it will, in fact, become resistance like it has today. Now, where are we? We've pulled back almost again, actually at about 340, and it's not meant as a precise level, but 340 and a half is the volume weighted average price from last Thursday, February 24th. We tag that perfectly Wednesday into the close, and then we got a really nice bounce yesterday off of that. So, like any level of support or resistance, the more often it's tested, the more likely it is to fail. So I think what is likely to occur if we're going to continue lower is we undercut Wednesday's low, maybe on this move, even probably not into the close, but maybe tomorrow. And then we bounce up a little bit. Then people think, hey, it's okay. But then the 5-day moving average will be declining. And then the next move lower is, I think, going to bring the next flush in the market. If it holds successfully, let's just say above 339, then we still have a lot of corrective action to take in terms of healing this market because, again, we're below the 20, the 50. They're both declining. We're below the year-to-date volume-weighted average price. We're below the volume-weighted average price from January of 2021. It just looks ugly. We're in a bearish environment, and people need to stop looking for bargains in the junk pile.
Yeah, absolutely. You've preached once and again to stay away from those downtrends, and I'm hoping you'll leave us with some more uptrends as well today once we get to maybe in 5-10 minutes from now.
Sure.
Perfect. Thank you, Brian. Richard, couple more for you. SWBI as well as AAL.
All right, let's bring up SWBI. Smith & Wesson looks like. So looking at the overall chart, once again, taking a step back, really since August of 2020, it hasn't really gone anywhere. We pushed up, looks like almost a short squeeze up to almost 40, and now we're back down at 1788. So in an overall downtrend below declining 200-day moving average. And we had a recent gap down on basically early December on the 3rd. We're holding that high volume close, but we're just still going sideways chopping. So no clear direction. We're above the shorter term moving averages, but once again, everything's in the context of the longer term trend. We're below declining 200-day moving average. So not really something I'm looking for. But I know some people are probably looking for a breakout through 18 or 18.97, the high of this range, but not something I'm personally interested in. Bringing up the other one, that was American Airlines, I believe. Yep, so today looks like a break of yesterday's low, which was an inside day. Yesterday's low would have been a good short opportunity below declining moving averages. If you flip this upside down, it would be a nice breakout through some pivots and an overall uptrend. But obviously, it's not flipped upside down. We're below a declining 200-day moving average, below all the key moving averages I use. And just looking at the chart, it's very choppy. It's kind of been this way in this overall downtrend since really March of last year. And nothing really I'm looking for a long position, just a lot of chop and an overall downward trend below a declining 200-day moving average. So those are my thoughts on those two.
Perfect. Thank you, Richard.
Yep.
Okay, Brian, would like to hear your thoughts on Xle and Xlf.
Okay, XLE has had a spectacular rally, and as I think we mentioned this one last week, and where we came down to last week was, again, you can't make it up. Last Thursday's low was precisely, to the penny on the year-to-date volume-weighted average price. There was nothing else in that area to indicate that level might become a place where buyers showed up, but there were buy programs waiting there at that volume-weighted average price for the year. Now, since then, of course, that was at $65 per share, 65 and 30 or whatever. We've rallied, basically 10 points. So that's what, 15%. So again, it's not it's not a new discovery, but it's clearly in a beautiful uptrend. It's short-term extended, so you've got to be very careful about making new purchases here. I would prefer that maybe it pulls back for 2 to 3 days to kind of rebuild some energy and then go. I would say the risk here is, pretty much what I said it was in VALE, which is that both of these stocks, kind of have had the same type of move, but that if it doesn't look like it, but if there is some kind of breakthrough with Russia and Ukraine, that they have a protracted ceasefire or something happens to make it seem like there's more hope over there than there is now, that oil will likely sell off dramatically, that is quickly and severely, because it's kind of got this war premium, you could say, built into it. So that will quickly evaporate. So I think for long positions, it's too late to buy it right now for this move. If it pulls back in a nice orderly way, then at some point next week, it might be setting up again. But the main priority here is, don't be complacent. We saw complacency destroying people in the tech names through the last 3-4 months, and now there's a new complacency being built into energy names. And just never let your guard down. Risk management is always job number one. Understand what reasonable stock moves look like, for an index like this. It's up 40+% here in the last 2 months. So if that premium disappears, then this thing will quickly drop down again to that year-to-date VWAP, perhaps even the 50-day moving average, which is starting to catch up to it. And then financials, bigger picture, they have come down to the volume-weighted average price from January of 2021. They did that about a month ago. Exactly. So on January 24th, they made their low there. And then again, they made it there on the 24th of this month. And then last month. And then the low this month is also at that level. Right now, we're below a declining 20 and 50-day moving average. We're seeing some of the bigger names like JP Morgan just completely, fall apart. I think that financials have made their move. It looks like a big topping process here. It's probably somewhere in the middle to late stages, late part of stage 3, that I would use rallies to lighten my position in any financial names, and it's kind of yesterday's news.
Very interesting. Can you elaborate a little bit just on that last piece? So putting it as yesterday's news, kind of not something you see super applicable moving forward?
I'm sorry, Gav, I didn't catch that last part.
So kind of that last part where you said it's yesterday's news, so not something that is going to be super factoring in for you moving forward.
It's just that, financials had their move off the COVID low from 18 to 42. So they came close to tripling, and, they've basically done nothing, big, wide, loose range over the last 6 to 8 months. And in that time, we did make, a lower high in February than we had in January, where we keep banging on this support. The more time support is tested, the more likely it is to fail. So we have pressure building from above that I think it's too early to say it will break, but it has the look of, let's say, the Russell 2000 back in December of last year, before it really broke down. I think it has a similar type of look to that, and that people are still trying to buy dips are, the easier, there's never easy money, but if there's easy money, it's already been made in the financials over the last 2 years. And now it's most likely going to rotate out of this group that's been strong and, join the rest of the market in this sell-off.
Perfect. Thank you, Brian. Okay. I'm going to throw up, Brian, I don't know, do you have a hard stop at 345? I was going to throw 2 more to Richard and then come back to you.
No, I do not. Not today.
Okay. All right. So we'll run the full hour today. Okay. Richard, 2 for you. One is going to be Google and the other one is HOG.
All right. Let's bring up Google. So this is obviously another mega cap here. That's pretty important for the QQQ and the indexes. This overall just below an increasing 200 SMA, but once again, super choppy. And right now it is doing a big downside reversal bar, finishing right at the lows of the day after gapping up. So not a great look in the short term. And we're back below, looks like all the key moving averages, the 21 EMA, below a declining 50 SMA as well. A few weeks ago, I think this is relevant. We had a gap up on earnings, but we didn't close well on that day. And pretty much from that day, we've been in a downtrend. We undercut that 50 SMA once again, and now we're just going, sideways below all those moving averages. So not a great look. Looks very choppy. Looks very kind of wide and loose here. And since we are below that 200-day moving average, I think it's kind of guilty until proven innocent, to use Brian's language here. And I'd have to really see tightness, explosion up on volume, to kind of reset this base. And for I'd have to see a lot of constructive price and volume action before I consider a long in this name. Most likely some people are looking at the short through maybe yesterday's low. That's pretty much my take on Google. Doesn't look too great. Looks a little bit better than Amazon maybe, but not by too much. Bringing up HOG, this is one I'm super familiar with. Looks like it's Harley Davidson. So taking a step back, I always like to look at a weekly when I first bring up a new chart. This stock has gone pretty much nowhere since 2001, so that's some perspective there. The all-time high is around 76. We're at 41 here. It's been in a longer-term downtrend since pretty much 2015. We're starting to push up off the COVID lows here, and going back to the daily, you can see we had a recent gap up. So recent action has been decently strong. We had a gap up on volume, good closing range. We pulled back into the 200-day moving average, the 50 SMA, not the 50 SMA, the 21 EMA, sorry about that. And now we're kind of drifting higher, but still needs to form a little bit of tightness before I look for a swing trade entry. But recent action has been good. Just the overall longer-term history to me says this is kind of a really mature stock and not something I'm really focused on. I think the newer, more innovative companies that have come public in the past, around 2 years, that's kind of my sweet spot there. But this is a name that looks a little bit better than some of the names under declining moving averages. It's not necessarily in a longer term downtrend. at least, since the March 2020 correction.
Yeah, it's definitely good to see ones that aren't just completely falling over the last few months. Okay, let's pull out a couple more here for yourself, Brian. Actually, this could be interesting. A couple people have asked for gold and silver. If you could take a look at those.
Yeah, gold is on its way. I mean, my dog tweeted about it about a week and a half ago when GLD was 173, and it's that we're starting to see that it is becoming what people always want it to be, which is a flight to quality store of value. And I think that what's going on in Russia and people can't access their rubles and their rubles are worth nothing, that people are looking for alternative stores of value in Bitcoin, and other cryptos as well as gold. So it broke a downtrend line that you could put from basically the middle of 2020 through about 3 weeks ago. And it looks like the GLD is likely to go challenge the high from 2020 up at about 195. And the risk in here is probably below, probably about 175. You just always have to look at what's the most relevant higher low to protect yourself with a stop. And I think it's 175 in gold. Silver is just a little, it's kind of a little bit behind it and a lot sloppier pattern, but it's starting to build in this area. This is, this level has been important, 23 and a half. Late 20, the fourth quarter of 2020, it was resistance. That flipped to support through, the first 3 quarters of 2021. And then it's been resistance since. And, if it can I think it probably needs to close above 23.75 to 24. If it can do that, it's highly likely that it goes on to the high end of this range, which is, near that 28 level. And then, the apes will get on it and squeeze people. I'm kidding about that when they tried to do that last year, and it had that spike up, which I think was in when they thought they were bigger than the silver market, February of last year. Beyond that, I think 30 is realistic. I think you get it to close above 23.75, 24, then it's likely to head towards $30.
Very interesting. Yeah, I do remember that squeeze. That lasted a couple days, right?
It lasted at one gap up that morning, and then it was lights out for those people who thought they were going to, do what they did to GameStop with silver.
Yeah, the hold the bag move, as we call it. Good times.
Always.
All right, we'll see what happens this year.
By the way, I heard there's a new documentary about that coming out on HBO Max tonight about GameStop. Should be an interesting watch.
What's it called?
I don't know. I just saw a little blurb about it this morning, but if you have HBO Max, it'd probably be pretty easy to find.
There's been a lot of good financial documentaries, like stock market related ones. I know the WeWork one too, and there's a Zoom one too coming as well.
Yeah, the WeWork I'm looking forward to watching as well.
Well, speaking of Evan in the conversation, first off, this market is falling while we are watching. The AMD puts that we put out on this morning's call, we were live at market open, are now up 200% today. So props to anyone who's been holding those. Evan, do you want to throw out a couple of names for some analysis?
Yeah, I got it. So I like to come here from looking at the 52-week high list. Get some positive thoughts on these stocks, get some positive sentiment going. So I'm going to start with, I believe Richard is next. So I'm going to start with Coca-Cola, KO, and we'll go with Union Pacific too, UNP.
Sure thing. So yeah, Coca-Cola, nice trend above uptrending moving averages. Looks like it's making new all-time highs. That's always good. So yeah, nothing really much to say about this. This is an uptrend. above all the moving averages I look at, so it looks pretty good from that perspective. UNP, bringing that up. This is also right near all-time highs. It looks like we did have a nice push yesterday, and then today looks like we had a slight gap up, push all the way up to 263. But now we're not closing great today. So looks like sellers took control into the end of today on higher volume than yesterday. So definitely want to see that stick and don't want to see more weakness come in. But yeah, near all-time highs, so faring better than most stocks in this market. So yeah, that's kind of my take on those two. KO definitely in a nice uptrend. And Gab, I actually wanted to throw it over to you and kind of turn the tables on you in your own space and kind of ask you, and just in general, what are some things in terms of technical analysis that you've picked up from, interviewing and talking with all the traders on these spaces?
Good question, Richard. Well, first off, I would say, I have Brian hammering into my head, don't buy stocks in downtrends. That's for sure. Deep in there. That one's not coming out. And number two, I would say one of the things that I have really taken away, and this is less of a technical analysis thing and more of just something I've learned from the traders, is just not letting profit go red, not letting green go red. Really just getting out, right? Being happy with, hey, there's 5, 10, 15%. I'm going to take that and I'm going to exit at this point. Number three, I would say learning how to create my own opportunities, right? So taking the things such as anchored VWAP and volume shelves and, looking at different moving averages and understanding what they mean in relation to the chart, and then being able to use that to find my own key levels, pivot points, areas of interest and buying opportunities to get in, right? Even understanding things like RSI and MACD, BB/KC squeezes, things like that have all added to it. And outside of that, I think, I think those are like three main things, right? So the people, right? Like the people that I can learn from and the mindset with which they approach the market. Number two would be the indicators, which ones they're using, which ones work best for them, how they go about that, specific areas of the market that are attractive. So I've learned to, gravitate towards the areas that are not just in uptrends, but also, have future catalysts, have things coming up, staying away from trading around earnings. That one has been a good one. I got burned there once and really didn't go back. And then I would say, like, lastly, one thing which I've seen, and this is specifically according to technicals, is that it doesn't matter a lot of times when you're looking at it from a pure technical perspective. I'm coming in on this day. A lot of times it matters much less, what the company itself does, right? That's something that I've noticed because I'm throwing out names that, obviously a lot of them you guys have never heard of, but you're still able to do an analysis. So it's removing some of the bias sometimes of a company's industry and sector and focusing more on price action, and actually like what the chart is telling you versus what the industry says. Because I've noticed certain names within specific industries can move entirely different from the rest of the industry at a moment's notice, or just have something else that affects them. So, risk management, specific indicators, people, lessons like that have been stuff that I've definitely taken away and have been made my style a lot more successful, I would say, that in 2022 than it was in 2021. And then lastly, I would say just like using stops. I think I used to live on hopium a little bit for a while, be like, no, I came in and I was confident with this one and it's going to rebound and stuff. And I would just hold all the way down. And now, the second really, the aim right now is obviously to get into something that is going to go green, whether that's 5, 10, 15%. I then will usually immediately remove 50% of the exposure so that I can afford to hold a little bit longer in case it swings red and green a little bit. But the second it drops, 5, 10, 15% underneath, I'm usually cutting that. And then either I can look for a reentry or move it to the next one. So that was a little bit all over the place, but some of the stuff that I've been learning.
Yeah, definitely sounds like you've been working on your risk management a lot more, which I think is vital to stay in the game. You have to stay in the game to be able to trade. So I think that's super important. Going back to your indicator point, I think what's important to remember for newer traders out there is you don't need the MACD, the RSI, the stochastic, all these indicators all on your screen at once. That's not going to make you a better trader. You want to pick the things that make sense to you and focus and specialize. Obviously, Brian with the VWAP, that's his tool of choice, but more indicators doesn't mean more performance. And often keeping it simple, just a few moving averages, one indicator maybe, that's kind of, I would say that the better way to go. Just learn that in and out, learn the nuances of setups, learn how to read price action itself. That's kind of what I would recommend. Brian, any thoughts based on what Gab said?
I thought it was great answers from Gav. Well, one more thing, another thing I learned, and obviously, Gav's taken a lot of this in, and I think he's, we all met in person back in October, and it's obvious that the two of you are you're a lot younger than me. I mean this as a huge compliment that you're very bright and you have the ability to learn some of these things through a medium, such as Twitter, and to be able to, if I could have accessed my, financial idols back in the day and learned some of the lessons that, the impassioned lessons that I try to put out there, I put them out there because, trust me, I've made all of the mistakes. I've made them all more times than I care to admit. It's embarrassing how many times you can make the same mistake over and over again, even when you tell yourself, why are you doing this? This doesn't make sense. Oh, but I'm right this time. And just the little mental games that if you can hammer these things in at a young age that you guys are at, you're it'll be amazing to see what your careers are going to be. I'm long both of you guys.
Hey, feels good. Feels good. Yeah, Brian, you're not wrong. Being able to access people like yourself and others' minds on here and just pick them all day, I think it's going to go a long way. And still super, super early within my trading career. Obviously a lot of lessons learned and excited to see like a bunch of different markets as we progress. But, I'll flip it the other way. Major props and thank you to people like yourself who are kind of taking the chance on people like us and taking the opportunity where I don't think you have like the world to gain from being on it, right? Like you've done very well for yourself. I've met you, you travel, you do all these things, but you come and take time out of the day and spend it with us to educate us. So it's really not possible for us to be growing and being in the position that we do without people like you.
It's easy to make bets on winners. That's the way I view it. If you guys were in downtrends, I'd stay away, Gav.
That's a great one. Evan, did you have your hand up there?
Yeah, I was just going to ask, how can I acquire leaps on Wolf and Richard?
Right.
And Brian, too, but I don't think that one's for sale.
So Gurgaon Capital has something for you, stock market news. We have the counterparty for this trade, so if you're down, let us know. We got